Hi, this is Rahul Sharma here from JM Financial. Well, Budget 2024 is just done, and the good thing about this budget was the markets went with very little expectations going into it. Also, the populist measures that some were expecting didn't come through, and that bode well for the equity environment. Well, the Nifty, technically, as long as it trades above the 21,750 mark, it remains in a bull grip. Well, the low of 21,100 odd remains a crucial support going into the February series, which began with dominance of shorts primarily by the FIs. Well, in the last 3 odd trading sessions, we've seen these shorts coming off a bit, but as soon as we close above the 22,000 mark, that will pose a serious challenge to the bears at this point in time. Well, there are some segments of the market which look extremely hot and can generate alpha in the month of February. Let us take them one by one. Now, as you can see, the Nifty continues to do extremely well. The overbought situation that we had a few days back is now back under control, and now the Nifty is ready to scale new highs. We almost did that today, but now I think slowly, gradually, we should head towards 22,500, which acts as a psychological number on the upside. Well, putting any number on the upside would be unfair because this is uncharted territory, but the direction of the market remains up as we trade above the crucial moving averages, and the moment we cross 22,000, all the previous resistances will then become very strong supports. Now, coming on to the area of the market which could witness a big up move. Now, this is the ratio chart of the Nifty 500 versus the Nifty 50 index, which means the broader market index is poised towards a new breakout. Now, what does this translate into? We could have the next 3 to 4 months of the mid and small cap area of the market doing extremely well. So after the recent pause, this is probably that period where the mid and small cap could come back again, and we could see very big upside happening in these names. So momentum could be high in terms of the breakout. That could bode well for the short-term traders. Now, coming to the pain point of the market, it is the private banks which started the correction for the Nifty from earlier 22,000 mark that we were at, led by HDFC Bank, but it is the PSU banks which continue to shine. As you can see in this ratio chart, this is essentially more than a decade of underperformance that the PSU banks have had with respect to private banks. Now, this underperformance has now got reversed, and this reversal could mean that over the next 11 odd months, we could see the PSU banking space dominate the banking area. Now, if you remember, the year 2023 was dominated by PSEs, and early last year, which was January 2023, we were right on the money when we said that a decadal breakout is on place in the PSE index, and the entire year we saw PSE names do extremely well. Similar breakout is seen in the PSU banking space this year. We had highlighted this a few months back. Now, this breakout only gets stronger as the PSU bank index is heading towards newer and newer highs. Now, there is the PSE index, which is enjoying the time of its life. It is overheated for sure. The monthly RSI has reached peak levels of 90. The best thing to do is take some money off the table. Individual stocks may do well if they've had a recent correction, but at an index level, it seems like the PSE index is one where you should book profits and look out for alternatives, or look out for a proper correction for re-entry in this space. Well, there is one sector which is slowly but steadily heading towards a new breakout. Now, 18 months of underperformance was there in IT. Around 6 months back, we highlighted this, and IT has done relatively well over the last 3 to 4 months. But now I think the time is ripe for the IT index to change gears. Probably result-wise, the worst quarter is done for them, and from here on, we should expect positive numbers. But technically speaking, the rounding bottom should take us anywhere in the vicinity of 4 to 5% upside for the index in the short term, and even more in the coming few months. So IT remains a buy in the overall scheme of things and can continue to do well. Well, the next index, which is cyclical in nature, this sector is cyclical, extremely cyclical, I would say, but now I think it is in the pink of the health. It is very strong. It not only works as a defensive, but absolute charts of pharma companies are also looking very, very attractive. So I think the momentum should be very high in this space. Pharma remains a continued buy on this space, and we could very well see this index heading towards newer and newer highs. There is another sectoral index which is at the cusp, or which is at a make or a break point. Well, as you can see in the graph, it's a rising wedge that is formed on the long-term charts of the metal index. Well, there are chances that this bearish structure gets negated once we cross the upper blue line, the upper trend line that as you can see in the graph. Once that happens, metals could surprise in a big way this year. As much as 25 to 30% upside can be expected if this breakout does take place. And because this is a cyclical play, that is, the kind of moves that we've seen in the past have been of very high magnitude. Something similar can happen in this space as well in this year. So keep your investments aligned towards the metal space. Yes, it is a highly volatile space because of what happens in China plays a crucial role. But looking at the charts, as long as this breakout does take place, we feel that this is the place to be, especially on the long side. Now coming to auto. Now if metals do well, metal prices do well, auto will feel the pinch. But at least the index is suggesting that there is a bearish divergence on the daily charts, which means that there could be a correction in the auto space. So if you are holding on to longs, if you are holding on to your investments in auto, the time is right to book some profits. If you remember, we have had Tata Motors as our Diwali pick. The stock has delivered phenomenal return of 44% in a matter of 3 months. So this is probably the right time to book profits. All our targets have been met. And auto as a space, I think, is overheated, where one can book profits and wait for a sizable correction to take place. Coming to currencies and commodities. Well, USD INR, as you can see, has been pretty sideways. If you are a trader, directional trader for that matter, it has been a difficult pitch to bat on. But the 200-day moving average could bring the key to unlock this setup. Now, last time we hit the 200-day moving average in August last year, we saw a very big up move, vertical up move happening in the USD INR. Now we're very close to that. 82.70 is where the 200-day EMA for the pair is. If that does get tested and if there is a bounce back, we could very well see a big up move happening in the USD INR pair. Until that happens, the trend remains down and we may see selling pressure in the short term for the currency pair. Now coming to oil, which has been the focus given the geopolitical scenario in the US and Iran situation. If that flares up, we could see oil boil from here, which means $95 to $100 per barrel is very much possible. And if that happens, that will not only put the brakes on the equity markets, but at the same time, we could see gold also do well in that period. So coming to gold is relatively looking very good. In fact, this has been quiet for a while, but still continues to trade above its key moving averages. And we feel a new high in gold is very much on the cards over the next few weeks. So gold remains a buy over here, and the trend is very much positive. Yes, you could look to buy closer to the 50-day moving average, but overall, the outlook on gold is that of a higher high and a higher low. So the risk reward remains favorable for long positions to be bought on dips. Now coming to the summary. So essentially equity should have a good month as far as the Nifty is concerned. About 22,000, the bias remains very positive, especially after the recent cool down that we've seen in the Nifty index. PSU banks would continue to do well. Nifty Reality, which saw a breakout of a decade a few months back, could continue to do well. We've seen DLF doing excellently well. DLF was part of our Diwali picks as well, which is doing extremely well, which has done well. In fact, all the targets have been met. But we feel that there is a lot more upside to be had in the tier 2, tier 3 names. So Reality is another space which could do well. Auto, cautious. We could see a bit of correction happening over there. And as long as there is no macro change that changes things in a very big way, we feel that this is a buy on dip market. And as long as the crucial support levels are honored, we feel that Nifty has more upside in store in the month of February. Thank you so much for listening to this video. Look forward to engaging with you on a regular basis. Thank you.
Investment in securities market are subject to market risks. Read all the related documents carefully before investing.